Hey guys, what's up? It's Chad. Just wanted to talk to you today about vertical spreads. Last month I put on a great vertical spread trade, and I just wanted to share it with you, both my reasoning for why to do it and the pros and cons of using a vertical spread. A lot of pros will use vertical spreads because they're low cost and high reward, and if you can be right, you'll win a lot. So let's look at this. Let's look at what I did last month. So in front of you, we have the chart for Chipotle. So as we all know, Chipotle has not been doing well, right? So um, we have, oops. Okay, here we go. So we have Chipotle right here. Looks like it's been going down, 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 right? So last October, it was $750 a share, and it dropped precipitously. Right here is where we had the outbreak of foodborne illness in their stores, and it killed them for a long time. And then they had several other problems, so started to make a comeback here, but eventually got all the way down to 384. So I was looking to buy Chipotle right around here, and I'll tell you why. Um, I'm going to zoom in here. So if I zoom in, this is where I was looking. On August 16th, I saw this. There was a little move up, a little tick up there, and I thought, oh well, maybe this is a buying opportunity. Maybe Chipotle is bottoming. So if you look at the chart, there's been sort of a bottoming process right about here, right at the 385 level or so. And when I looked at the decreasing highs, so we have a high back here on May 24th, and then a high back here on July 24th or 25th. And these are downward going highs. However, if you look down here at the MACD that I have on your bottom of your screen, we have upgoing bottoms. So that's called an MACD divergence. So if this is going up, this is going down, or maybe it's better if I say that's going up or down and that's going up, then that can be a bullish signal. So when I saw this, it looked like it was bottoming, so I bought calls. So I bought a vertical spread calls. So the stock was right around 400. So I looked at this line here, and I thought it should come back at least to there. And if it breaks out, then here's the next level of support or resistance, right around 450. So that's sort of my goal, was going to be somewhere in between this line and here we go. So that's where I was looking. So what I did was I bought a 430 and a 435 call spread. So 435 and 430. So these are calls. So what you do when you have a vertical call spread is you're expecting the stock to go up, right? So you buy this, and I bought this for $3.42. Oops, there we go. And then I sold these. And that was for $2 and let's see, $2.68, I think. So for this call spread, I spent 74 cents, or 74 cents per contract. So 0.74. Now the upside, if it expires above 435, then you get to collect your maximum profit. So the difference between this is $5. So $5 minus the 74 cents gives you your max profit of $4.26 per contract. So if this closed above 435, you'd pocket $4.26. So I went out to the September expiration, September 16th. I gave myself 30 days. Should probably give yourself a little more time than that actually, but I was feeling brave and I thought the stock was going to move. So I kept it. So I did September. And as you can see, it started off a little lower, but ended up going up to about the 425 level. And I was already in the money by that time. So that was great. What I was going to do was I was considering closing out at this line or watching it for a breakout all the way to 450, like I said. What actually happened was it started moving against me, and I considered closing my position, but I still had some time in it, and I thought maybe it would stop at this 50-day moving average, which actually it did. So it stopped there. So that's why I stayed in the trade. And then yesterday, I don't know if you guys heard, but Pershing Square bought about 10% stake in Chipotle. And if you look back here, right here, there's this big spike in volume. So that day, about 4 million shares traded, and the average is down closer to like 1 million. So if you look at Chipotle's shares outstanding, there's 29 million shares outstanding. So if Pershing Square bought 10% of that, that's 2.9 million shares. So this is probably when they bought it, right here. And this is why you look for big jumps like this. So back here, back at the end of April, this is probably an institution selling. So you see this big drop. And then right here, Pershing Square, you see that's institutional buying. So they bought. So the stock came back, and I was able to get in here. So the next thing I wanted to talk to you about was the pros and cons of doing a vertical bull call spread, which is what I did. So we had these two levels, 430 and 435. So I was way in the money. I was definitely making money, right? But and so first of all, the pros. Pros are it's very cheap. These are cheap positions. You can make multiple times your money. So like we showed before, I put in 74 cents, and I could have made $4.26, which is awesome, right? That's a huge bump. The con for all vertical spreads, and you have to remember this, is you have to wait all the way to expiration, which is oftentimes very inconvenient. So my expiration was not for another 10 days. So did I want to wait that long? No, I absolutely did not. You know, there's this big gap. I wasn't sure if the gap was going to fill, if it was going to pull back below that line, or if it was going to move forward. And even today, it pulled back some. So I closed out my profit. And even though I didn't make the entire $4.26 per contract, you know, this was definitely a 3 to 4 times bagger, and in less than 30 days. That's pretty good. So I went ahead and closed out my position yesterday. I think the spread actually yesterday, if you look at this range, so the stock traded between about 431 and 440 roughly, and the range throughout the day was about $2 to $3.50. I closed out my position right in the middle of that, which is fine. I was happy with that. But yeah, if I had sold my positions at the top at 441, even though it's above the 435 calls, which I sold, I would have only made $3.50. If you looked at the way the option chain was working yesterday, it looked like in order for me to get even close to my $4.26, the stock would have had to be up here like around 465 level. So that was way far away. So I wasn't going to get anywhere near that. So I went ahead and closed out my position. But the reason that it doesn't go that far is because, you're selling one and you're buying the other, and you're hoping that the price is above your buy zone. So if it's in between the two, then the call options that you sold will become worthless. Well, at expiration, they become worthless if they're below the strike price, and if they're above it, then you just make whatever the difference is between the two. So that's why my maximum profit would be $4.26 since I paid 74 cents. But as the stock is going up before expiration, both of these options will increase in price. So the closer it is to your options contracts that you sold, then those will have more implied volatility, right? They'll have more extrinsic value. So that's why you don't get your entire max profit right off the bat. All right. So that's the bad thing about a vertical spread. You have to wait till expiration to get the full profit, even if you're right. So I got a little lucky with that Pershing Square purchase. So they probably did do the purchase back here, but they didn't announce it until yesterday, which is when everybody else bought it. And I reaped the rewards. Oh yeah. All right. Well, hopefully that helps. Get out there and try out some vertical call spreads. You can do the opposite with puts. You can do a vertical bear put spread. So that's when you think the stock is going down, and in that case you buy a put that's higher than a put that you sell. So that works the opposite way. You want that to go down. Ideally, you want it to be right around the sell strike price or below to make your maximum profit at expiration, like I said. All right. Well, hopefully you guys all have a great Thursday. Today is the start of the NFL season. Way to go. I'm excited. I got my fantasy team all drafted. I'm all set up. Hopefully yours is too. And hopefully you win your league. Get some money, put it into the market. All right, you guys. Have a good rest of your week. I'll talk to you later. Bye-bye.